Yeah, Morgan, good afternoon. A bit of a head scratcher about what Fed Chair Jay Powell might have said, prompting bond yields and stocks both to sell off pretty hard, with some pointing to his comments on inflation, very dovish comments, and his failure to commit to act to keep a lid on yields. Powell striking a very dovish tone when it comes to the outlook for Fed policy. Among the things he said, he did note that he had seen the speed of the rate hikes or the yield rise. Previously, they, quote, caught my attention. And he struck a dovish tone, saying it will take some time to achieve substantial further progress, which is the metric the Fed uses to change its policy. And adding to that, saying Fed's not going to hike just because the labor market is strong. Now, Powell essentially reiterated comments he had previously made that higher inflation is coming, but believes it will be temporary and will not be a reason for the Fed to act preemptively to hike rates.
Businesses and people would need to believe that larger increases in prices would be repeated year after year, and we think it's unlikely that these deeply ingrained low inflation expectations would suddenly change. It is more likely that effects like the ones I described would be one-time effects.
Going into this speech, it may be that market expectations for the Fed to act to lower long-term bond yields had risen to the point that Powell's failure to embrace the possibility sparked the sell-off.
Yeah, Steve, I mean, along those lines, it kind of raises the question, has the market been right to expect the Fed to act to tamp down long rates? I mean, what are you hearing from Fed officials, especially the fact that this was a Wall Street Journal event? It wasn't like, it was a Fed meeting.
Yeah. Well, I think the market got way ahead of itself, got a little frothy in its expectations for Powell to act. My conversations with Fed officials are that, yeah, they say it's right, they can do this, but they're very far from from ever actually doing this right now. If Powell were to act to tamp down long-term bond yields, he would not have the full support of the board at this point, is my read. I think they expect, as Powell said, by the way, yields to rise. I mean, the idea that that there's an expected rebound in the economy, they would certainly expect yields to rise back up to the 1.75% to 2% level that we had before the pandemic. Maybe not quite that high in this go round, but eventually that would be their expectation. So they're not spooked by this, and they're also not close to acting. But I think the market got ahead of itself, perhaps, in believing the Fed was about to act, and Powell might have sanctioned it at this speech.
Shepard Smith here. Thanks for watching CNBC on YouTube.